Good morning and welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. Well, since we last spoke, lots happened. More missiles being fired left, right and centre. More threat of global nuclear apocalypse, stuff like that. And a big flood in Texas. It was pretty dry anyway, probably needed the water. So really looking at this kind of stuff, the missile stuff with North Korea I found incredibly laughable, not because we were on the edge of a world war, nuclear world war, and probably everyone getting zapped. The fact is that the Japanese could not or did not have the ordnance in order to shoot a missile from Korea out of the air. How the hell does North Korea, fire a missile, first of all, second of all, manages to get it over the north of Japan without the Japanese military or offshore guidance systems shooting this missile down? That is what we have to be really worried about here. We had a spike in gold, as you can see on the chart here. I'm just going to zoom in here, and it's there we go, this spike, and then started retracement, but we haven't retraced the full movement yet. I think based on the fact that a lot of people understand what the hell is going on with Japan. How come Japan did not have the military feasibility, awareness to shoot this thing down? Most countries, well, certainly most Western countries, and Japan should have this as well, have the facility in order to shoot these things down, or at least have an alert which will do something about it. This is shocking, I think, in terms of how far the missile got, and I think it should be right in the front of people's minds that he can hit what he wants now in the north of Japan easily, because there's nothing there to stop him. I mean, this is what's quite ridiculous about this retracement here. The threat is still very, very evident and very alive, and the fact that Japan looks like it doesn't have the capability to defend itself is quite frightening, and so that should be really very much in the front of our mind in terms of trading, certainly over the next month, next weekend. Whenever Kim Jong fancies having a go. So that's on the back of in the front of my mind, sort of staying back. But we broke through the resistance area around 1300 through 1317. I said was first resistance. We spiked up 1324. So we've had high to low for this month. If it closes as it does, $72 range. Most August I said was average around about 83, so that's not too bad. We picked it up in the end, and from open to close around about half of that, $34. So nothing of real note or real interest, but we are in the higher range now of this consolidated trading pattern. Whether we stay above 1300 is another thing. The move higher was really dependent on this missile stuff, but also I think there's going to be some inflation stuff coming into this as well, and a play later on, and yield, or that the gold does not yield. So that'll be interesting. But in terms of that trade, just pending more missile news, to be honest, and this is where this is all going. I was surprised we didn't get a $60, $70 move. I was surprised we're not at $13.50 on all of this nonsense, but it was controlled to an extent. We did have some spikes. Friday we did spike down. It's around the 73 area, 75 area, and then retraced. So the market is jittery, but I thought we would be a lot higher in terms of the risk of this missile threat from North Korea. But anyway, we're over that now, and we try and trade what we can trade in terms of what's in front of us now. We have continuing claims, PCE deflators this afternoon for the US. but really everyone's waiting for the non-farm payrolls, which is tomorrow. ADP was healthy. As you can see across the market, dollar's gone up. It's been buoyant. Euro has come off. Cable has not really done much, which is a bit surprising considering the trouble we're in terms of Brexit, and we're leaderless at the moment. Theresa May hasn't a clue. Davis, the negotiator for Brexit, doesn't have a clue. No one can agree on anything, and the Europeans or whoever's taken that side of it are absolutely laughing in our faces at the moment because it's all over the place. So sterling, I can see 129 being a very, very good opportunity to get short, in my opinion, with downsides of 127, 125 quite easily in the near-term future. Just looking at some other crosses here. Euro dollar has had a small pullback, as I said, but we still, the upward trend is still there. Euro sterling was the trade that I was saying was a good one, but once again we've had a pullback. Like we're doing all these things. People take P&L. There's this a redirection, a reportfolio, sync, and news changes people's views and stuff. So, but if you look at the trend is going up, even though there's a small blip. And we just look at Dow as well. So Dow, flat for the month. Opens 21913, and we're trading 21908. So an absolutely flat, as you like, pancake, nothing. Trump, missile crisis, doesn't really matter. He's been relatively quiet because he's been dealing with this lovely stuff, the unfortunate floods in Texas, to the best of his ability, which is not that great. He takes his wife along, who gives something to people to look at, but really he's a bit of a shocker, really. So we just kind of, the X3 markets flat in terms of the US. Gold from open to close, up smalls, $34. But we're really just looking on the data released on our non-farm payrolls. Bit of Draghi later on next week as well, and just trying to get some consensus and some direction, because what's happened the last couple of days in terms of the abrupt move up, the reversal, now where are we, what do we do? Is it dollar off still? Is it dollar bull on again? Is it risk off? Is it risk on? When you have macro events like the missile issues, it kind of fudges everyone's view or fudges everyone's perspective of what should be going on and what should be happening. Hopefully we get some sort of clarity after NFP, but NFP is just a crazy show, as we all know, and I always say, I tell people not to trade the figure, trade after it if you have, but generally I leave that day alone because it's just full of craziness. So in terms of the book today and coming economic releases, as I say, there's PCE deflator and there's pending home sales at 3 o'clock in the US, but I sort of really suspect that a lot of people will start getting flat. It's the end of month as well, and people are starting to take positions off because of non-farm payroll, and just come in Monday, which is a Labour Day in the States, so there'll be a few products which will be closing early. But generally, I think most of the market will be back on Tuesday, and on Tuesday as well, most of the UK market should be back, traders, because the schools have gone back. So we have everyone back who needs to be back. Let's start getting some consensus on where the market's going. Let's get some ideas about where we should be going, and then let's just have an efficient, free-flowing, price filled at every price, no gapping market, and we can get back to just kind of enjoying the day job. So from me in the front lines, have a good day and take care.